This morning, Brookfield announcing it's teaming up with Qatar on a new $20 billion AI infrastructure investment. For more, let's go to Leslie Picker at the Goldman Sachs Financial Services Conference in New York City. Feels like they have an announcement every single week, Leslie.
It really does, particularly in this infrastructure AI space. And luckily, we can learn a bit more about it because I'm here with Bruce Flatt, the CEO of Brookfield. Thank you, Bruce, for joining us today. So the new partnership that Sarah just outlined, that's part of a new strategy aimed at investing in infrastructure broadly, tied to AI. You have $10 billion in equity through your own balance sheet and third-party investors, including NVIDIA, and along with co-investments in debt. You plan to build and acquire as much as $100 billion worth of AI infrastructure. This, of course, is against this backdrop of concerns about where we're at in the cycle. Are there still places to deploy that you feel like aren't frothy at this point in time?
So maybe the most important thing is that what we do is lay the backbone infrastructure around the world in different sectors for centuries. So we've been doing it in real estate, we've been doing it in pipelines, we've been doing it in roads, we've been doing it in rail for many, many decades. And now all we're doing is partnering with companies and countries to lay the next backbone of global infrastructure in their country. And in Qatar, we've announced this project where we will lay artificial intelligence infrastructure in the country. And why it's important is that each country needs to have artificial intelligence backbone to drive their economy in the future. And if you don't have it, businesses will leave. And that's really important. And this is a 20-year runway. So you can pick and choose in the stock markets. That's not our business. Our business is just about laying infrastructure down. And what's important to us is finding power, building data centers, building compute capacity, and finding counterparties that have good credit quality on the other side. And if you do those three things, you will have very intelligent investments that earn good returns for very long periods of time, and that's what our business is about.
Infrastructure booms in years past, whether it's railroads or fiber optic, they've seen kind of the ups and downs of the cycles too. Are you worried about that? Are you worried that there is too much capital chasing this space because it is so important right now, obviously, but at a certain price?
So remember, our business is just financing the global best. So we're partnering with Google and we're partnering with Microsoft. We're partnering with countries of the world. And most of those have high A, double A, or triple A credits. And therefore, we're just financing their businesses for long periods of time. And unlike cycles before, which you refer to, when fiber was laid down, there were no counterparties on the other side. So there will be mistakes made by some. But if you know what you're doing on building, if you have the capital right, and if you have counterparties on the other side of your transactions, this is a long, long cycle, and we will all do very well in it.
So you're not too worried about just the overall level of debt that the hyperscalers are taking on to achieve this?
No. This is they're all investing for a very long-term future. And what I can tell you is from we have 400 companies where we're deploying artificial intelligence, and the early stages of deployment of artificial intelligence is very meaningful to business. And those that get with it are going to excel. And the next 10 to 15 years is going to be very exciting because of that.
As part of your partnerships, Sarah mentioned the one with Qatar. You also have Kuwait as part of this AI build-out. How are you thinking about regional geopolitical risk, particularly given the evolving tech alliances that we've seen as it pertains to technology and competitiveness?
So, look, all we try to do, because we're investing very large sums of money for very long periods of time. So what we try to do is find good countries and invest with good people in good assets. And if you do that, over the longer term, you're going to be fine. So we just try to, we have 30, 40 countries that we invest into. We go to them, we set up, we stay for long periods of time. And that backdrop allows us to continue to build out what we do in infrastructure. And that's what's more important than I'd say, short-term volatility in capital markets or short-term political thinking.
I want to pivot a little closer to home because you're one of the largest real estate investors in the world, particularly commercial real estate, with a sizable presence here in New York City. Mayor-elect Zohran Mamdani has pledged a variety of policies that many in your industry have been concerned about, whether it's fears that the policies could affect landlords or that the wealthy could flee to other states. Has the election changed the way that you invest or plan to invest in New York City?
So, as stated a second ago, we go to good places with good people and invest in good assets. And if you have those things, short-term periods of time don't really bother us. We will live through this. New York City's been growing and excelling and getting better for hundreds of years. And it will continue to do that in the future. This is a great place. It's the deepest capital market, the largest real estate business in the world. New York City will be a great place 25 years from now.
Have you reached out to the mayor's office or the mayor himself to explain what you think the city needs in terms of real estate?
I'm sure some of our people have.
In terms of partnership? Okay. This is obviously a very big macro week. The FOMC meeting is tomorrow. What are you seeing across your portfolio? You have a very diversified portfolio geographically as well as sector-based in terms of distress as well as risk appetite. And based on that, do you think that the Fed should cut rates tomorrow?
Look, rates are unduly high because they were dealing with inflation. I think rates will continue to come down through 26. That'll be good for capital markets. It will be good for real estate. It'll be good for real assets. But the underlying fundamentals of the economy are actually pretty positive. And that continues today and has been getting better, I'd say month by month, quarter by quarter. But we need to, interest rates should come down because they're unduly high from where they should be in a normal environment at this point in time.
All right. Bruce Flatt, CEO of Brookfield, thank you so much for joining us today from the Goldman Sachs Financial Services Conference here in New York City. Really appreciate your time.